Hey there, it's Mike Wise, CMG Home Loans with your weekly mortgage update. I am back in action this week after being gone on vacation and at a CMG presidential club meeting in Hawaii last week. So it was good times. This week was pretty volatile with mortgage rates. A lot of things going on in the market that made it volatile. So let's take a look and see what we have here. So the tariffs, big thing here. The tariffs on again, off again. That is bringing volatility in the market. It takes money out of the stock market, puts it into the bond market. So it's a risk off trade to go into the bond market to be a little bit more secure. And then when the tariffs go off again, then the money comes out of the bond market, raising yields, puts it back into the stock market where the market increases. So it basically was a very volatile week as far as that's concerned. PCE, inflation, it's starting to come down. That was very helpful. It came down a little bit here, and you can see that the trend is coming down, but you can also see that it's very, very sticky right now and that it is not coming down at a fast enough pace. This is something that the Fed is going to watch for. Mortgage rates dropped back down. They're right around 6.75% on this. But this is some of the big news. The R word is back. Recession is back in the news. That's had a kind of a big impact. And what happened here is the Atlanta Fed reserves, what they're now cast for the GDP model, it went down by 2.8% annualized contraction for the first quarter of 2025. That's worse than the 1.5% that they had before. And so that's where, this is where the recession word is starting to come into play. Wall Street doesn't quite think that it's that bad here and that the market is better than expected. So ADP jobs report came in. That was way down, lower than expected here. So you can see it was 77,000 jobs versus the 140,000 jobs that they were expecting. So that's down significantly from where they were talking about there. Despite all this, like I said, there's a 7% chance that the Fed is going to cut rates in March. The meeting is March 19th. Rental rates, they keep on going down. This is a big number where you should watch that because as those rents start to come down, which I still think they're kind of on the high side, but as those come down, that will help inflation come down. That's a big part of the inflation numbers. Inventory starting to go up still here. So that's good news and bad news, right? It's good news for more properties out there, bad news for prices. And you can see that the inventory situation, it varies from state to state. Okay, and this is something that I thought was pretty interesting. This is February of 2020 versus February of 2025. So pre-pandemic to now, where are listings? And you can see by state where they're at. California is right about the same as where we were pre-pandemic. Texas and Florida, the number of listings is up 25%, 30% from the pre-pandemic levels. That is bad news. That's where the housing prices are starting to fall. There's more inventory out there, and so that's a kind of a weird thing for prices on homes. In fact, in New York and Pennsylvania, they're still down. It's still a very, very tight market there. You're seeing 42% and let's see here, 42 and 36% respectively in New York and Pennsylvania as far as the listings are concerned. So prices, are they falling? In some areas they are. In fact, Oxnard right in our backyard made the list, down 9% in February. So there's a lot of things that go into this. There may be, just a few properties that made that adjustment there. But at the end of the day, Oxnard made the top 10 here, or the top 100 list for February. And so where are mortgage rates? Mortgage rates are 6.79%, 30-year fixed rate mortgage. Jumbo, right around the same. They're a little bit higher than the conforming 30-year fix, but I quoted a 6.75, 6.65 rate this week here on that. So the government, FHA, and VA rates down into the low sixes here, so those are good things. And right now it's a pretty positive trend for mortgage rates to come down. So that's all good news there. This morning, the jobs numbers for this week, this is the Bureau of Labor Statistics, came out, added 151,000 jobs. That was a little bit lighter than expected. Mortgage market, bond market is treating that a lot better here. The unemployment rate, that actually went up to 4.1%. So that was a negative for the market, and that's, again, driving yields a little bit lower at this point in time. So let's see here. We're going to look directly at, this is live here. So this is the prices on the treasuries are up 12 basis points. You can see that we've been trending right up here. There's a resistance level here and a support level. We've been right in this range this week here. So it's been volatile up and down. You can see we've gone up and down to these support levels here. At the end of the day, like I said, the mortgage rates are trending lower here. You can see this is the yield on the 10-year Treasury. We bounced up from the low of 4.12% down here, and now we're trending right at 4.23%. So they came down, went back up a little bit here, just like I'm saying. So a lot of things, like I said, going on in the market here, and we are seeing the mortgage rates come down. I do think mortgage rates will continue to stay down here, but it's going to be a slow ride down. I will be around this weekend. Hope you had a great week. Hope you have a great weekend, and we will talk to you next week.